Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on euro currency. So yesterday it was a bit choppy price action, but market in general keeps the major points, major levels that we discussed in the previous video that have really big importance for short-term situation, short-term perspective of the market. So as you can see on the daily chart, well, market stands actually in a tight range, and by itself in a medium-term perspective, we suggest that this is bullish because in fact, as you know, this market stands in reaction on a weekly strong resistance. Not just the confidence resistance stands right here, but it's also weekly overbought. And as usual, as a rule, market shows more extended price action when it reacts on so strong levels. The fact that market here shows small reaction and stands for a long time already in a tight range, it itself looks bullish. Yesterday also suggests that this downward action has stopped surprisingly somewhere in the middle of the flag and turns up. That also could be the first sign. It's not clear yet, but in general this type of action is also bullish. And you can see this here, yesterday was a bit greater volatility because market has formed first greater lows, lower lows, and then returned back up, forming high. So actually this price action looks like the reversal, not quite reversal because market hasn't closed above the top of the previous session. But still it shows some break point in a intraday sentiment in the market. And as all this stuff stands in the middle of the flag, that could be, for example, early reversal. In this case, indeed, the breakout could follow. So this also looks bullish, and flag itself, of course, as well. So that's why, despite what intraday trading plan we have, where we plan the trade, taking the position, and what patterns we're watching for, overall situation here and price action that we see looks bullish on the euro. We do not know in what particular moment, in what day, some breakout will fall and how it will happen, but long-standing in a very tight range, forming the bullish continuation pattern, this is the bullish sign. And if you trade, for example, on the weekly chart, on the daily, it's not so as crucial for a position taking moment as for those of you who trade on the daily and intraday chart. There, yes, we have to calculate carefully our risk in relation to potential target, where in the better place stop, because as a rule, traders do not risk more than the 50 pips in a trade on the Forex. So that's why on the daily chart, actually, if you trade on the high time frames and watching opportunities to take in the long position, usually traders just take in position inside of the consolidation where they stop below some strong level and watch how market will continue upward action on the higher time frames. But this is very extended stop. So if you have the 1250 currently stop below 108, it's very significant distance, and we can't let us to place so far standing stops. That's only for monthly and weekly traders. Here we just keep in consideration that overall price action looks bullish here. So on the 4-hour time frame chart, yesterday we also talked about this triangle consolidation and said if you would like to take position on a quiet market, you could consider taking the position somewhere inside of this triangle with the stops below these lows. Of course, as close to the lows you will take it, all the better, because you will get the potential less risk in this case. Because potentially, as we also talked about it, this could be the butterfly, guys, and it has 115.80 target that corresponds to daily XOP, right? So that could be the butterfly. It's upward continuation. And until market stands above these lows, this butterfly will be valid. Those of you, as we said following on the conservative approach, yes, you could wait for some kind of the A, B, C top T pattern. It's possible still it could be formed because market hasn't challenged yet this resistance, and potentially its downside butterfly also could be. But the unpleasant moment that you could get is that market could show the breakout, and in this case you will get worse entry point, but this is not the strategy. The more problem you will get with it trying to come aboard, because market will be on the upward extension mode, you will have to catch the retracement correctly where you could take the position, and that's not very pleasant. So that's two different approaches that you have currently. On the intraday charts, take a look what has happened. Yesterday we also talked on XOP, and currently, as you can see, mostly XOP has been hit with this tail to the downside, where market has trying to complete the XOP. Our divergence still stands here, and take a look here, we also have minor divergence as well, these two lows. Alright? This price action, guys, makes me think that this is some kind of the some kind of the price rejection or something of that sort, because market barely has tested and then shows the sky rocket jump out of this area. So it means that market has made some force, bears have made some force to press market for these lows, maybe grabbing stops. It reminds me of the wash and rinse. And standing of the XOP here just help market to do this. So market mostly has hit the XOP. Once it has been hit, stops have been grabbed, and market just jumped up. So this price action also looks bullish. Well, currently what we could say, if you haven't taken the position yesterday, well, you could try to wait for some pullback here, some retracement of this most recent action. That's first approach. I'm talking only for those who are considering taking the position based on this butterfly above these lows and inside this triangle. Alternatively, you could use stop buy order. When the market starts breaking this area, you, for example, could place stop buy order slightly above this area. Once it will be hit, you will buy on a rally to the upside. That's another opportunity for position taking. So currently, my suggestion, guys, is some building process is standing inside this triangle, so market is accumulating the power for the breakout. And since we have the good background for the EUR, fundamental background, I suggest that market is preparing for upward action, and probably, I'm not sure that this week we will get it, but maybe on the beginning of the next week something should happen. Currently, definitely I do not see, so bullish context definitely valid. I would suggest that turning to on the dark side only if market will break the conference. So if market will erase the rally, showing the fast breakout for the conference support, that will be clearly bearish. But until market stands above the conference, we're currently discussing just the entry point. But context stands bullish anyway. Whether you will take the position inside the triangle based on the butterfly, or you will decide to wait when the market will form A, B, C, D pattern right to the conference, and then you're trying to buy at the conference. All these scenarios are bullish. This is just different approaches depending on your view on the market, what you see, and we're trying just to react on the new price action that we see. This price action, guys, makes me think that market could try to show early upward breakout of the flag and start of the upward continuation. So that's what really could happen. That's our view on the EUR.